Have you ever entered a trade and price seems to know exactly where your stop loss is, hits it, and then reverses? Have you ever entered on a bullish bias after price makes a move higher just for the market to reverse? In this video, I will be teaching you the basics to understanding intraday manipulation. You will know how, when, and where they form. Hello everybody, welcome back to my channel. My name is Jacob, and today I'm going to walk you through intraday manipulation. And at the end, I'm going to give you a practice module for your study so that you can practice these moves, and when you are trading, you can see these moves before they occur. So without further ado, let's get into it. Okay, so where do we anticipate manipulation for the overnight session? This is also coined as the London AM by ICT. He has many different names, but it's the time span between 2 a.m. and 5 a.m. So this is in New York time or Eastern Standard Time or UTC-4. I suggest putting your trading view times to that time because ICT will always mention these time frames. We use a midnight open to delineate false moves, and when we are bullish, we expect the move to be lower below the midnight open, and then when we are bearish, we expect the false move to occur above the midnight open. And this false move usually occurs between 2 a.m. and 3:30, right at the beginning of the session, between that hour and a half time span. It can occur later, but usually it forms between this time. And in bearish bias days, while also looking for a run above the midnight open, we also look at a swing high to be captured for buy side liquidity before moving lower. And then this is the opposite for when we are bullish. We look for a swing low that formed before 2 o'clock to be swept for running higher. So here's an example of a bearish false move, and the low formed at 2:45. We get a run below the midnight open, below a short-term low, and then an expansion higher. We have a bullish false move, and the high occurs at 2 a.m. and it has both of the criteria. It's above the midnight open, and it's above a swing high that formed before 2 a.m. So retail buys this, thinking they're buying into strength, when the true objective is lower. So for the New York session, where do we expect manipulation here? We expect manipulation at 8:30, so we delineate that line for the open. And when we are bullish, we expect a sweep below this 8:30 open, and when bearish, we expect a sweep above the 8:30 open. This false move usually occurs in the hour span of 8:30 to 9:30, and when you're capitalizing on the daily range, the highest probability is buying when we have a sweep below the 8:30 open and the midnight open. When we're bullish, we want to buy in a deep discount, so having the midnight open and the 8:30 above us, then we can confidently buy that when we are bullish. In bearish bias days, we delineate a swing high that forms prior to 8:30 for price to sweep before continuing lower, and then for bullish days is the opposite. We look for a sweep lower of a swing low that formed before 8:30. But here is a bearish example of a false move. We broke below the 8:30 open, which is the first criteria, and then a swing low that formed prior to 8:30. We broke below that, and we even broke below the midnight open, which is delineated by this blue line. And this low forms at 9:45, and then we can see bullish expansion coming from there. And here is a bearish model example. At 8:30, we had a false move higher above this swing high for buy side liquidity, and this one forms at the 9:30 injected volatility. Okay, so where do we anticipate manipulation for the PM session? Well, like the previous examples, we anticipate a false move when we are bullish to sweep the 1:30 open, and when we are bearish, we expect the sweep to be higher. And this false move usually occurs between the hour span of 1:30 and 2:30. Now, I know that the session times are the same for the New York session and the PM session in regards to how long they are. They're both 2.5 hours long, but you have to keep in mind that 8:30 has a lot of volatility issued from 9:30. So manipulation is more stretched out in the New York session because of the volatility at 9:30. So we can expect it to usually form between 2:30. Now, this does not mean that it cannot form after 2:30. This is just from what I've studied. And the highest probability setups occur for the PM session to continue the expansion of the rest of the day is when we haven't reached the higher time frame target that we delineated at the beginning of the day. When we reach that in the New York session, it's possible that we get a retracement off of the low in the PM session. Think of what ICT coins as power 3, where we have accumulation, manipulation, distribution. If we already reached the low point, we can see some retracement off of the close. And just like the previous examples, bearish bias day, swing high, sweep, continuation, and then bullish, swing low, sweep, continuation higher. And this is a bearish false move, but we see price break down below the 130 open, below the swing low, set up the low of the day at 215 before continuing higher. And then here is a bullish false move in a bearish bias day. We get a swing above a swing high for buy side liquidity, and this high forms right at 230 and then continues lower to take out this low, just barely, but that's good enough for government work, right? So the Asian range, this is the last session of the day, and we do not focus on this when we are trading indices. So this session should only be traded with Forex pairs not coupled with the US dollar, preferably AUD, New Zealand, and Japanese pairs. We can couple exotics like GBP CHF, that's the Great British Pound Swiss, which will also have volatility at these times, but the US dollar is very dormant usually. We don't anticipate much range expansion during that time, so we should not trade like Euro USD at this time. It's not very favorable for a high odds setups. So same as the previous, we mark the 7 p.m. or 19 open horizontally, and we expect a run below when we are bullish, and when we are bearish, we expect the 7 p.m. open to be swept and then ran lower. This Judas swing usually occurs within the hour and a half of 7 to 8:30, and same as previous, we look for that swing high to be swept when we're bearish and for a continuation lower. And then for bullishness, we expect a swing low to be swept before continuing. There's a swing high here that I couldn't fit on the screen. I didn't want to stretch it all in and make it look nasty. So I suggest you go to May 15th. It's a Friday on AUD JPY and see the swing high. And there's a little something in this price leg too that you should delineate. It's good for your notes. I suggest you do that. But here's a false move high that forms at 9 p.m. It's outside of the time range that I delineated of 7 to 8:30. This isn't an end all be all. It's just like a statistical. This is usually where it forms. You're going to find outliers, and I discuss more of outliers of false moves in the next slide. But anyway, we get a high that formed at 9 p.m. and then an extreme sell-off from there. So we have this false move, and we delineate this swing low that formed before 7 p.m. Here's a 7 p.m. horizontal line, and we ran lower below this swing low to capture sell side liquidity before continuing higher. This is a very nice move on this example, which moved 148 pips just in this session from low to high. So there's some things that can occur when you are forward testing false moves. Sometimes price will not give the false move at the beginning of the session and will instead run aggressively in one direction or the other. Now, if you were a market maker, why would you want to move price very aggressively and not try to fake traders out? If you want liquidity, then why don't you just create a false move? Try to create a theory in your head. I suggest pausing the video and trying to think about this. It's okay if you don't get it. ICT does mention this in his mentorship. I forget which episode, but pause the video now and see if you can figure out what I'm talking about. Okay, so these type of situations indicate strong buy and sell models. So when price has an objective for the daily range and it will not give a false move, that means that there will be an aggressive repricing to a specific level. Price has an objective and it needs to get there as soon as possible. So it won't allow any retracements until that daily range objective has been completed. So here's an example of an aggressive bearish repricing. We can see right at 8:30, we just moved lower, and that's all we did. And the same thing happened at 1:30. If we get an aggressive repricing throughout the New York session, we shouldn't expect to get a Judas swing for the PM session. Unless the daily objective has been hit, then we could maybe assume some sort of Judas swing or a continuation. There's reasons why price will not allow retracements when there's built up liquidity that has not been taken for periods of time. This is an example of an aggressive bullish repricing. You see that there's no false move in the London session. Right from the Asian session, we kind of just expanded. This is also AUD JPY. So that's why there's so much volatility in the Asian session. Another thing that can happen when you're forecasting false moves is that your bias is wrong. Now for this, you have to remember not to force your will on the market. You're going to be wrong, especially as a new trader. You're going to be wrong on bias. You can't expect to know the bias and know how price is going to move. Everything is a probability game. We use confluences to decide whether price will most likely be bullish or bearish. And especially if you're new, you're going to get this wrong. I get this wrong all the time. And ICT does too. So, no one's susceptible to getting the wrong bias. You just need to be okay with being wrong and just move on. Either don't trade, just watch price, but you can't get upset over this stuff. I can speak from this personally. When I wasn't 100% perfect, I would get very angry at myself. Like, oh, you didn't see this one thing at this one time. It's in the past. You can't think like that. That's why I'm so grateful for this community, is because it's making me realize so much of like the problems I have while trading that I need to fix. And, thank you all for your help. I really appreciate it. In future practice modules, I will teach you ways that you can switch your bias if you are wrong, but I'm not going to go into that right now. We're just going to focus on false moves and how to practice them. All right, this is the last slide of this presentation. If you made it this far, leave a like. This is the practice module for intraday manipulation. So first, what you want to do is note how the session moved, bullish or bearish. We're not trying to forecast any moves. We're just going to note how it moved in hindsight. So based on the open and close, I'll use London AM as an example. 2 a.m. to 5 a.m. 2 a.m. is the open, 5 a.m. is the close. And note if it's a bullish or bearish session. And then circle the false move like I did in all of these examples. And then you're going to want to delineate the time, the high or the low of the false move like I did in the examples. And also, the last part, you're going to note the intraday sweeps and runs on buy side and sell side liquidity based on the bullish or bearish sentiment you have for that session. This might be familiar to you if you haven't watched practice module 1, where I talk more in depth about intraday sweeps and runs on buy side and sell side liquidity. I suggest clicking up here, but we're going to move on to the people that have already watched that. So here's an example of how you would mark the practice module. We're actually going to go straight to TradingView, and I'm going to show you this example in real time of how you would do it. Okay, so we're on TradingView. Today is the 26th of May, and that's what this price action is. And we're only going to go over the London AM, the New York, and the London close or the PM session. We're not going to go over the Asian session because we don't trade the indices Asian session. Remember? We went over this. So first, you want to note how the session moved. So the London AM session was bullish, the New York session was also bullish, and then the PM session was bearish. So I use these lines to delineate a bullish or bearish close. Okay, like in the examples, I circled the false move. This is a bullish session, so we circle a bearish false move. Bullish, bearish, bearish, bullish. Okay, now we delineate the high or low of the false move. So this is a bearish false move, and the low came in at 2 a.m. Bearish false move, low came in at 8:30. And then a bullish false move, but the high came in at 3:45 for the session. We're going to go over this soon. Okay, now we're going to note the intraday sweeps and runs on buy side and sell side liquidity. This is a bullish run, so we expect sweeps of lows and runs on highs. We create an equal high in the London session, which was ran during the lunch. And then same for the New York session, we have a bearish judas swing with a low at 8:30. And then we have a run on the previous recorded high, very stretched expansion. And then the PM session, we had a bearish session and a bullish judas swing. And then we started moving lower, but then we poked it back above and then finished the day bearish. Now, you see a little question mark here. Now, the judas swing usually forms in the beginning of the session, but there's something special about the afternoon session. I'm going to go to a lower time frame and show you. Okay, so now we're on the 5-minute time frame. We have this judas swing higher, a fall lower. Right before the session ends, we have another swing higher before going lower. Now, what I want to draw your attention to is if you would like to trade the afternoon session, pay attention to the time span between 3:30 and 4:30. There's a phenomenon that occurs with indices where during this time span, price can have an aggressive repricing higher or lower, and it can be either in your favor or whipsaw, kind of like it did today. Now, what you'll notice is this high at 350 is equal to the current daily high, which printed at 110. We just swept above this buy side liquidity before running lower. Price needed a little bit more buy side liquidity before making the run lower to take out this low. So this is a run, and then this is a sweep. Because it was a bearish session, we expect sweeps of highs and runs on lows. Go through your notes, and after you do this practice module, note the time span between 3:30 and 4:30, and note the price lag that occurs within this time for indices. You'll notice either something like this, or it'll aggressively reprice lower or higher. And this is because of something called orders on close. Traders have orders that they want to execute at the close, so price will move aggressively to get the trader into that position before moving it lower. And you may have noticed this beautiful indicator here that overlays the sessions and the midnight open, the 8:30 open, the 1:30 open, and the week open here. It's a little bit higher up. I created this indicator called JWT sessions, and by the time this video goes up, I will have listed this on the Discord server. So if you want to use this indicator, it'll be in the Discord. It'll be under helpful indicators, and this is completely free. All you have to do is join the Discord. But just a quick walkthrough. We have these inputs here to show the kill zones, show the daily dividers, and show the days of the week. And then you can customize the colors of each session. I noted that I also matched the color of the horizontal and the vertical midnight lines with the same color, just so you kind of see how they correspond with each other. And then this is a toggle for using the midnight open line. Try to make this user friendly as possible. So I created these time zones for every single asset class, and different asset classes use different time zones. I had to add or subtract based on UTC time, based on America to Chicago or America to New York, or ETC/UTC. You're welcome is basically what I'm trying to say there. You can also toggle specific sessions to be on or off. So if you don't trade the London, you can turn that off. New York, London close, and then the Asian session. A quick note about the Asian session. There is an Asian session line. Since I'm on a NASDAQ futures contract, it's disabled automatically. This is for your safety. Don't trade the Asian session during indices because it's going to be garbage. If I go to like Euro USD, you can see that this line is on here, as well as the weekly. And then these times automatically update to 8:30. Let's go to like Bitcoin. We'll use Bitstamp. And then this is automatically updated. And it does include the line for Asia. Thank you for watching. If you found this video insightful, be sure to leave a like so that it can be pushed out to more people who can also find it insightful. And subscribe if you find this content useful. I'm going to keep creating it, so you might as well get alerted when I create it, right? All right, that's all. Talk to you soon.